Hi, my name is Dutch Rojas. Welcome back to What the Dutch. Today we're going to talk about insurance. Specifically, let's discuss why your hard-earned premiums are leaving the door, never to return. That's where captive insurance comes in. It's a tool that flips the script on traditional insurance and gives you control over your premiums, your risk, and your cash flow. In less than 10 minutes, you're going to know exactly what a captive is, how it works, and why it's a game changer for healthcare businesses and commercial real estate executives just like you. What is a captive? A captive insurance company is an insurance entity that you own. Let me repeat that. You own it. Instead of paying premiums to a traditional carrier, you pay them into your captive. Now here's how it works. Number one, you create a captive insurance company. This entity exists to insure your business. Number two, you pay premiums into the captive, which covers your risks just like with a traditional insurance product. Number three, unused premiums stay in the captive at the end of the year. Instead of losing those unused funds, they stay in-house building reserves. It's a way to stop pouring money into the black hole of traditional insurance and start keeping it in your business. Now, why do businesses use captives? Captives are not just for Fortune 1000 companies. They're used by healthcare, real estate, and executives across financial services and other savvy businesses because they save money. Captives eliminate the middleman. They cut expenses by 20 and 30%. They also build reserves, and over time, your captive grows into a financial asset that can fund future premiums. They offer control. You decide which risks to cover, whether property, liability, or specialty risks like malpractice. Imagine having the flexibility to tailor your insurance to your needs while keeping the surplus money. That's what a captive does. Captives work best for organizations with predictable risks and significant insurance spending, like healthcare facilities. A captive can dramatically improve your bottom line if you're spending $500,000 or more annually on these insurance expenses. Think about a hospital. It might pay $500,000 a year in property insurance premiums. With the captives, they'd reduce that by 30% and retain the unused premiums, turning a sunk cost into a long-term financial asset. Now that's the quick version. A captive insurance company lets you own your risk, keep your cash, and take control of your insurance strategy. In the next video, we're going to discuss how physician-owned hospitals and large private practices can use captives to turn premiums into assets on the balance sheet. If this has you curious, stick around. The real-world applications are where things get exciting. Now remember, you can email info@ficap.com for more information. Rojas out.